All right, what's up, y'all? I'm back today with another trading recap for you guys. I low-key realized I didn't give you guys an update actually on my current trading status per se. Currently, right now, I have on the screen our weekly performance stats for the for what do you call it? Alpha Ticks right now. This is my funded account. This is currently our performance stats. Since we've gotten funded, we got funded on Thursday, October 30th, and so we've had a few rough patches. Unfortunately, we wouldn't be this behind per se with if Thursday didn't happen, but it happened. I tilted a little bit, not too much, but I hit my personal loss limit, and I don't like that. That was way too much that I should have done. That was way more than I needed to do. But then we recovered. We slowly grinded up, made some money here, lost that money. So we've kind of come back to break even now with these 2 days, Tuesday and Wednesday. Today and yesterday had great trading days. Check out my TikTok. I did a recap for gold for that as well. So definitely check that out if you want to get your recap and whatnot. So yeah, that's the performance stats for that. And then we're just gonna talk about the trade I kind of took today. Also took it on my eval as well. So this is the that's the trade currently. Let me drag this in here. You guys can see this as well on my eval. So yeah, okay, around here. So I'm gonna show you guys the profit so you guys believe it. You see, also made a thousand on my eval, and then you can see these are the two trades I took as well. So let's get into why I took these trades. Today was pretty light. It was very simple. I like to get in and get out of the market once the market kind of opens. I look for my opportunity early, right? So a part of my strategy, if you look at my most recent video, I am gonna drop a more updated video of my strategy because I have been working with a few people as well to kind of like recalibrate the strategy, make it more stronger, see what we can do. And so I kind of did that as well. So let's see. So I will drop a video for that. For now, just come along. So here on the hourly, right, upon market open, we're essentially bullish, right? Market's going up, right? Everybody has a bullish bias except me. And the reason why I didn't have a bullish bias was because we took out 4 hour liquidity overnight at around 5 a.m. I had I had these levels already marked out pre-market. So not pre-market, like yesterday. I'm talking like during Asia session or so. I had these levels marked out. The reason being was because we were in an interesting position where market can decide to show continuation to go lower and break all these support levels that we have here, these support levels here as well, all this liquidity, or right, um, we just continue higher and we just create another support as well. So I kind of was, I seen that bullish structure was there, but I realized that we were gonna need some type of retracement to take out um this liquidity here. Yesterday's PM session liquidity kind of stacked around here, these lows here. I seen a 1 hour for value gap that was created, a gap here that I wanted to see get respected. Obviously disrespected. I will delete that after, but this is just for the recap. PM low and then previous day low. So I had all of these levels just marked out kind of ready. As you can see, liquidity stacked up. And these NYPM high as well as break even, those were used during the trade. So my liquidity points were marked out. So obviously we know we have bullish nature on the 15 minute. Now, if you looked closely, I took a short on the 5 minute. I took a short. I didn't take a long. The reason why I took a short was because I was anticipating price after taking out this liquidity here to then come down and take out the rest of its sell side liquidity. Simple turtle suit action, right? Take out the big dog, we come for internal liquidity in order to go higher. If the trend is truly bullish, I do believe that we need to take out the sell side liquidity before we continue higher. And especially because the market, I believe there's if you guys are looking at poly market as well, it's a great investment. Definitely check that out. If you're looking at poly market, there's chances that the government shutdown is anticipated to actually reopen in a few hours. So like tomorrow morning roughly or so. So I definitely see price, doing this and then just gapping up and then, we continue higher finally after this huge retracement happened. But anyways, let's get specifically into the trade. So we get into the trade, we have our, key levels marked out, whatever, right? So now a key target or key liquidity that I was looking to pay attention to was the 1 hour fair value gap. That was a very important place of interest for me because I did think price would possibly take out previous day low, but I also felt like price would bounce and respect this 1 hour fair value gap because there's been many times in the last few weeks where I've seen price wick far from the fair value gap. This is about like almost 200 points far from the fair value gap, but still respect it. So that's why you've got to watch out as well. So now, specifically on this trade, obviously, right? The idea is find your liquidity point, look for an inverse fair value gap, wait for retracement or the EMA, and then enter off of there. So I was pretty aggressive today, right? Looking at this here around 9:20 into market open, right? We start seeing that and 15-minute inverse fair value gap get created upon here. This is a very important key point for me. Why? Because originally I wanted to see price retrace up to the fair value gap before continuing lower. But after seeing this huge sell-off, I had a feeling price just wanted to go straight for its liquidity right here. Here's another thing that I kind of use. This is why studying the market is just as important as sticking to your strategy purely, right? When you look here, I marked out New York PM session high, meaning this was the high of New York PM session right here. This was the high. If you look here, NYPM became an area in which price cannot get back above. This is very important. If I wanted to trade Powell, this is a short. The reason why I took this trade, this short right here, was because I had three options: either an EMA retracement, a fair value gap retracement, for continuation. This is the continuation play, or a rejection. And I chose the rejection retracement because of the levels I marked out. Now let's zoom in closer to the 1 minute, right? So we can kind of see what kind of happened here, right? We get here on the 1 minute, I see price kind of congregate. This is where I was still skeptical and I was hoping to see price potentially maybe, retrace back up or, respect the EMA, right? So here we come here, we close here, it wicks up, but it cannot close there. And I'm seeing price trying to wick, trying to tap into the NYPM session high, right? But it couldn't get above it. Now, PM session high and AM session high, like it's not really important. A lot of people like to do the whole session high, the whole session low. But the reason why I like to be specific about liquidity is because the more information you know, the better. It helps you become more prepared. So I was prepared for that. And that's why I had this level marked out. So we see this kind of reject this wick tap, and then displacement after taking out this internal or this turtle sweep low. This low. Now, this internal low is also important because, and this is relative to this, and this internal low is very important. And the reason why it's important is because it gives us a break. Let me write this instead. It gives us a break of structure on the 1 minute. We received a break of structure on the 1 minute. Receiving that break of structure on the 1 minute let me know that, okay, yes, we are getting a confirmation that we are going to go lower, right? So after seeing that displacement, I want to see one more candle that can actually confirm it. The displacement normally would be enough, but because this wasn't fully my plan that I back tested, I wanted to get more confirmation. What was my next version of confirmation? This candlestick right here. Upon seeing this candlestick reject before the 50% mark of this displacement, it rejected the level, the breaker structure level. It rejected the previous liquidity. Because I seen it respect it and come lower, that was my entry. I entered a bit early, as you can see. I entered before the candlestick closed, but I was still right anyways. Upon entry, I was able to snag a 2 to 1. This is literally $500 worth of risk. So this was not a positioning stop. This was more of a value stop. So I had my stop loss for $500, and then I targeted 2 to 1, right? Normal me, if I was targeting liquidity, I would have targeted the fair value gap, which is a little bit of a 2 to 1, and obviously that would have hit as well. But I wasn't sure because I tried, I don't like flipping through time frames. I wasn't sure if the 30-minute or the 15-minute or if there was like a fair value gap maybe that was created with a bigger wider stop than the 1 hour gap. Wasn't sure maybe if it was on the 4 hour or not. So I just stuck to the 2 to 1. I didn't target for the fair value gap, but definitely the fair value gap would have been a way better target. And that was how I got the trade for $1,000 on the eval. And then I did the same thing on the funded as well. Upon the funded, it was 1 to 1 though. It wasn't 2 to 1. But yeah, so then I took this here on the funded as well. 1 to 1. As you can see, I think this entry might have been later then this entry, what is this, 941? Or was it around the same? It was the same one, same entry. Yeah, same entry. This was $500 worth of risk, but this, if you see here on the 1 minute compared to here on the EMA, this is a bit higher. I had the 9 EMA. I have the 9 EMA here, and then here I have, the 921 whatever. So it was a bit better here. I had to stop above the EMA. If it disrespected the EMA, then trade wasn't gonna work regardless. So it was this to me was a B plus setup. And the reason why I said a B plus was because I did not consider ES. Unfortunately, I like using ES as my correlating pair. I actually like there was a lot of information trying to juggle trading this account and then trading my EVA. That was kind of annoying. Today felt a little bit more hectic than normal. And then I didn't look at ES, and then also this was continuation, so I didn't wait for the retracement or the EMA. I just played the kind of the displacement as well, which is not bad because I understand ICT and order flow and whatnot. I'm able to take trades like that and still be fine and confident with it because I know we're not always going to see our confluences. We're going to see other confluences. The other thing you might notice as well is because I haven't paid for TradingView Premium. I'm waiting for my payout in order to do that. It's kind of like a learning curve for me. The reason why I did that was because um I'm trying to get better at trading and not just spend unnecessary money that I also don't have. But I don't have my SMT indicator here. My SMT indicator probably would have helped me instead of me just looking at ES. I would have been able to see bearish SMT, and then we just go any lower. So that was the trade recap for today. Nothing too crazy. Definitely check out the gold recap. That was fun. I do plan on trading gold on days I have classes in the morning, so I'll trade gold the night before, and then I just won't trade it in New York AM session. And then back to the recap as well. We are on the way to a payout potentially, so we're seeing a payout maybe either ending this week or next week because we still have 2 days, two trading days. We have Thursday, and then we have Thursday night because I won't be trading Friday morning, and then we have next week as well. So we can definitely see what comes out of it. Just gonna be trading as normal. Nothing changes. Plan still stays the same. And yeah,